Welcome back to the bunker. I'm Jason, your host, and today I've got a special request that I'm gonna answer a special request from a viewer. What happens if you get assigned shares on your wheel strategy? Well, I have had that issue in the last 30 days, and I'm going to walk you through the life cycle of that trade. So let's get into it. Thanks for joining. The underlying in question is Airbnb. Of course, when I took the trade, it came up on my scan, and I thought, wow, that's going to be the prime time opportunity, I would think, for coming this summer. People will be doing more traveling. People are probably utilizing Airbnb a little bit more, and we might see an influx on the stock as well. The market's been moving up, uh, and this sector has been relatively strong. Based on my scan, so I looked. We were and actually it had my exact setup. I looked for kind of a Darvis box at the top of a breakout area. It was hit by the blue line here is my 20-day high, and the yellow line dashed line is the 10-day low. So we came down, swept down, and we're right here when I took the trade on the 5th of last month. We were about to look into breakout, so went ahead and took the trade, sold a put credit spread against it for 73 cents, which is basically $73. And you can see that on the history tab right here. So we collected $73. That's ours. And of course, what happened next was the worst case scenario, exactly what you don't expect to happen, but you should expect to happen and plan for it, because it will happen 40% of the time, most likely, at least based on the probabilities. It went the exact opposite direction. I think there was a news that traveling was down because for Airbnb because of the conflict that's happening in other parts of the country, and we sold off quite heavily, actually, all the way back down to the 200 SMA. We touched it, and we've kind of bounced off it since then. So as you can probably guess, based on the video, what happened was, um, well, I even thought that this was going to be a good trade, so I went ahead and did my swing trade analysis and bought 7 shares, and we'll get into that. The reason I'm highlighting that right now is because I actually sold it up here once I get assigned. And of course, the stock went down and went against us. And so what happened is, you can see right here, I got assigned and had to buy 100 shares at 140, because that's the put that I sold it at, right? Um, I don't have $14,000 in my account. I do have a margin account with Tasty Trade, and that's usually, I think you have to have a margin account to do options. Um, may or may not be true, but you probably should. So in this case, I got assigned, and Tasty's really good about it. They'll send you an email, told you have assigned shares, and that you need to have 24 hours essentially to fix that, and or supply the funds, which of course I don't have. I have a small account. So what you wind up doing is you simply just select those shares to sell them. And so I did. And my 7 shares, of course, it went against me, and I got stopped out on those essentially. So I went ahead and selected those, and you select the the put that you bought over here as well, which would be this one. Let's see, May 15th, right there. And you buy it back, or you sell it back. There we are. So once we do that, we've closed out this put credit spread and the assignment and the 7 shares that I bought. And now it looks like I'm down $391.54. Now, what you're thinking, hey, that's way over my risk tolerance. Normally, when I take a trade, it's only $130 to $150, which is 1% of my account. But as you know, I took this extra 7 shares, and that accounts for the extra that I wound up losing. So the most I risked, once again, my risk was the difference between these two put credit spreads. One was 40, one was 3, so it's $300, and the extra 91 there. So I took a two in on loss on that trade. Now the side B of the strategy here is where we go. We go out in time, which I went all the way out to December, and you wind up buying a call. So we buy a call that is at I think 80 delta at the time, And then in the end term, the short term, we go ahead and sell, and I try to do it weekly or bi-weekly, depending on the way the stock is performing. I'll sell a call against those shares, and we'll do that until the stock recovers. So we'll sell it at the same call that we got assigned, the 140, until we recover. Now, if you can notice, it looks like we are down. I think what did I miss? Yeah. Yep. So it looks like we're down $1,934.79. But the reason it looks like that because we paid another 1,600 for this call out in space. Um, and when I do my risk assessment for a trade like this, part of my process is I go out 6 months to 8 months, and I see what a 80 delta call is going to cost um, at that time. Usually, based on the probabilities, the amount is about the same, and I factor that in. So I essentially on my spreadsheet sequester that money and hold it for this trade just in case it does go against me. That I will have those funds to go ahead and do the side B of my strategy. And so that's where we're at now. And then, as you can see, the stock. We'll go back and look at the chart. You can see the stock. We did find a bottom. We bounced, and we've been going sideways, which essentially sideways and in the direction we're picking um, is what we want, and that's what we're getting. So we were able to extract the extrinsic value out of the calls I was selling. And we can go back to the history tab, and you could see I went ahead and bought that back for 31. The one I sold was for 120, and I bought it back for 31. That puts us credit. Now what are we looking at? We're only down 330, so we made up some money. And then I went ahead and sold another call. This one for June 5th, May, what was it, 7 days? Yeah, just about. So about a week and something days out. And then I went ahead and bought that back here for 53, so about a 60% profit as well. And where does that put us now? If we take that call back, now we're down only $242. And then we sold. I went ahead and sold a longer term. I did well, it was 45, about 50 days. So I did a 50-day. I went ahead and sold that call to essentially try to make up all that amount, and we're just going to hold it for a longer period. And that's where we're set right now. So if you look at it, essentially, once we buy that call back, we'll actually be up $9.82. Now that's if everything got wiped out today and we were able to get 1661 for that call. What we're doing now, the rest of it, go to positions. There's 300, I believe. Yeah. Where's my intrinsic value on this one? It's gone. There should be a value there. I wonder why. Right here, there definitely there should be an extrinsic value here of about the difference between the time we've been in the trade, which is about 5 days. So we probably had about $300 somewhere around there that we still have to collect on this. 300, yeah, we're marking it 327. So so looks like we're trying to get 70-80% of that. So we've got another 2 points to get out of this one, about $200. So based on those probabilities, of course, we never know what the future holds. We would be up once we take that out, up, let's say, $209. And that's the goal. And we'll keep selling those calls again until the stock recovers. That's the plan anyway. So you can see there's no reason to panic, especially. And you could kind of look, just to go over the other part, I did buy 9 more shares of it at this level, and I'll give you the reason. I don't know there is another popular option out there that has been back tested quite well, which gives you about a 67% probability of a winning trade, is when the MACD crosses over below the zero line and we're above the 200. So and the market is actually moving in the direction you're expecting it to. So I think all things lined up with this trade here. So I went ahead and put on one of my swing trades again in this stock, which you saw the 9 shares that I bought here. So hoping for little bullish action on this one over the summer months. Anyway, that's kind of what I wanted to go over. Uh, Actually is the perfect worst case scenario in every aspect, other than the worst scenario where the stock doesn't recover, it continues to go down, and then we have to cut our losses with it. But that usually would imply that it going below that 200 level. As long as it's above that, it's my indicator that we're bullish, and that it's above the 20, the 20 and the 50, which we were as well. So, if you have any questions, concerns, drop them in the comments. If you want me to expand on my strategy, I have videos on that. You can also check out this video here, and it'll show you how I find my stocks to trade. And until the next time, take care now. Bye bye then.